If you ignore the real reason for Bitcoin's latest crash, you're leaving your portfolio wide open for the next big liquidation cascade. So, picture this. In just 2 hours, Bitcoin absolutely tanks by $4,000, a drop that blindsided so many people. Now, everyone's blaming the usual suspects, standard market mechanics. But what if the real trigger was a single overlooked sentence from the CEO of Bitcoin's biggest corporate holder, hinting that they might be forced to sell? And that drop triggered a staggering $450 million in liquidations. Just gone. So here's the promise. By the end of this explainer, you're going to understand the 3 key forces that drove this plunge, and more importantly, what it signals for the market's next big move. All right, let's get into it. The immediate cause of that plunge from over $93,000, it was a massive wave of forced selling. Think of it as a tidal wave of liquidations hitting the market all at once, creating what we call a liquidation cascade. I mean, can you even wrap your head around that? $400 million just wiped out in a single hour. This kind of rapid, forced selling creates this really nasty downward spiral. But to really get what's going on, we need to break down what these leveraged longs actually are. So this is how a pretty small dip can turn into an absolute avalanche. Essentially, traders borrow money to make these huge bets that Bitcoin's price is going to go up. But here's the catch. If the price drops even a little bit, the system automatically sells their Bitcoin to cover that loan. That's a liquidation. And it is a classic domino effect. It all starts with one small price dip. That dip triggers the first round of automated sell-offs for those leveraged traders. Well, all that selling pushes the price down even more, right? Which then triggers the next wave of liquidations. It just feeds on itself. But here's the really crucial point. All these liquidations, they explain how the crash happened so fast. They don't explain why it started in the first place. So now, let's look at this really surprising piece of news that might have been that first domino to fall. Yeah, this was a question that was literally on nobody's radar. For the longest time, the market just assumed that MicroStrategy, which holds a massive amount of Bitcoin, would never sell. It was like a golden rule. But then, their CEO went and said something that just completely shattered that narrative. And this is the sentence that sent shockwaves through the market. He said they would be forced to sell Bitcoin if the MNAV trades below 1 and raising additional capital becomes difficult. For the first time, this introduced the idea, the possibility, that MicroStrategy, the company everyone thought of as a permanent buyer, could actually become a forced seller. And this right here is the heart of the whole sentiment shift. You see, the market went from thinking, okay, we have a guaranteed permanent buyer in MicroStrategy, to suddenly fearing, oh my God, they could become a massive seller. That single thought completely changes the psychology of the entire market. Okay, but let's pump the brakes for a second and add some really important context here. A forced sale isn't something that's about to happen tomorrow. The metric they mentioned, the MNAV, it's still safely above the trigger point. For this to become a real problem, the source points out that we'd need to see a deep, multi-year decline, and the company would have to be unable to raise money anywhere else. So, not an immediate threat. But, this MicroStrategy news didn't just happen in a bubble. It landed smack in the middle of a market that was already on edge. The entire financial world was feeling the heat, not just crypto. Yeah, just look at what else was going on. Traditional markets like the US 500 and small-cap stocks were already down. On top of that, you had everyone holding their breath for a speech from the Fed chair and for major inflation data to drop. You mix all that uncertainty together and you've got a recipe for caution. It was like pouring gasoline on an already smoldering fire. So you've got the liquidation cascade, the MicroStrategy bombshell, and this wider market fear all swirling around. The big question is, what happens next? What does all this mean for the future of Bitcoin? And this is where the analysis gets really interesting, because it gives us 2 totally different views. In the short term, say the next 3 to 6 months, things are looking pretty bearish. Bitcoin crashed through some key support levels, which usually suggests the price might have further to fall. But if you zoom out and look at the long-term strategy, the outlook is still very bullish. And this really gets to the core insight for anyone with a long-term mindset. It's all about perspective. I mean, if you truly believe Bitcoin is eventually going to hit, say, $500,000, Does it really matter if you bought in at 86,000 versus 90,000? From that point of view, these big drops aren't a crisis. They're a buying opportunity. So, ultimately, it all comes down to this one question. How you see this plunge depends entirely on your time horizon. Is it a crisis, a bearish signal that there's more pain to come, or is it an opportunity, a gift for the long-term believer? The answer to that question really defines your entire strategy.
Stay ahead in the crypto market. Subscribe now for the latest global news and updates.